Banking shakeup. The first US bank brings crypto to retail. Opportunity or trap? This is not what it looks like. What if I told you that the biggest crypto moment of the year didn't come from Silicon Valley, didn't come from a blockchain startup, and didn't come from Wall Street traders? It came from a bank. A traditional US bank has just opened the door to crypto for everyday retail customers. Not hedge funds, not institutions, but normal people. And the media is calling this a banking shakeup. But here's the question nobody is asking. Is this freedom, or is this control wrapped in convenience? Because history teaches us one brutal lesson. When banks suddenly embrace something they once hated, it's never for your benefit. Today, we're going to break down why banks rejected crypto for over a decade, why they're suddenly welcoming it now, what this means for your money, and the dangerous future most people aren't ready for. Stay with me, because this story is much bigger than Bitcoin. Why banks hated crypto and still do. For years, banks treated crypto like a disease. They said, it's unsafe. It's used by criminals. It's too volatile. It has no real value. But that was never the real reason. The real reason banks hated crypto was simple. Crypto removes the middleman. Bitcoin was designed after the 2008 financial crisis for one reason: to create money without permission, no bank approval, no account freezes, no opening hours, no centralized authority. That terrified banks. Because banks don't just hold your money, they control access to it, and crypto threatened that control. So why the sudden change? Now suddenly, the same banks that mocked crypto are saying, we're here to help retail investors access digital assets. Let me translate that into plain English. They don't want you leaving the system. They don't want you self-custodying. They don't want money outside their reach. Crypto adoption didn't fail. It succeeded too well. Banks realized something terrifying. Millions of people learned they could store wealth without a bank, move money instantly, avoid restrictions, avoid inflation traps. So instead of fighting crypto, they decided to absorb it. Just like the internet, online payments, credit cards, mobile banking, every revolution eventually gets domesticated. What this bank is really offering. Let's be clear, when a bank says, we're bringing crypto to retail customers, they are not saying, you own the private keys, you control the wallet, you are sovereign. What they're actually offering is crypto IOUs inside the banking system. Meaning, the bank holds custody, the bank controls access, the bank sets the rules, the bank reports activity. You may see Bitcoin on your screen, but you don't truly own it. And if you don't control the keys, you don't control the money. The dangerous precedent. This move sets a precedent that should concern everyone. Because once crypto becomes bank-approved, regulated, permissioned, integrated, it becomes trackable. And trackable money becomes programmable money. That means where you can spend, when you can spend, how much you can spend, whether you're allowed to spend at all. This isn't conspiracy. This is already being openly discussed by central banks worldwide. From crypto to CBDCs, the end game. This is not about Bitcoin. This is about the pathway. Step 1, banks normalize digital assets. Step 2, they protect consumers with regulation. Step 3, they integrate compliance, identity, and controls. Step 4, they introduce central bank digital currencies. And suddenly, cash disappears, privacy disappears, financial independence disappears. Crypto inside banks becomes the training wheels for a fully digital, fully controlled system. Who benefits from this? Not you. Let's be honest. Banks don't move unless there's profit, there's leverage, there's control. Retail investors get convenience, familiar apps, false confidence. Banks get fees, data, surveillance, retention, and most importantly, they stop money from escaping the system. The illusion of safety. Many people will say, at least it's safer inside a bank. Is it? Ask anyone who experienced account freezes, payment blocks, sanctions, compliance errors, suspicious activity flags. Your crypto inside a bank is still subject to court orders, policy changes, emergency rules, government pressure. The illusion of safety is the most powerful tool ever invented. What smart money is actually doing? While retail investors are celebrating bank-approved crypto, smart money is accumulating physical assets, using cold storage, reducing counterparty risk, preparing for monetary resets. They understand something crucial. Access matters more than price. You don't lose wealth when markets crash. You lose wealth when you can't access it. This is a warning, not a celebration. This news headline sounds bullish. It sounds like progress. It sounds like adoption. But history shows us, every time banks embrace innovation, they reshape it to serve them, not you. Crypto was born to remove control. Banks are reintroducing it. What should you do? Practical thinking. This is not financial advice. This is survival thinking. Ask yourself, who controls my assets? Can I move them freely? Can they be frozen? Can rules change overnight? Diversification is not just about assets. It's about systems. Never rely on one gatekeeper. Conclusion: the real banking shakeup. The real shakeup isn't crypto entering banks. The real shakeup is this: banks admitting they can't stop it. Governments admitting they must adapt. People realizing money is changing forever. The question is, will this change make you freer or more controlled? Because the future of money is digital, but the future of freedom, that part is still undecided. If this made you think, share it. If this made you uncomfortable, that's the point. Subscribe for more unfiltered financial reality, because in a world of digital money, awareness is wealth. Stay awake, stay aware. This is Felix. See you next time.